And welcome back. I'm Raymond Dahlman, and this is the weekly economic update for May 24th, 2021. Hope everyone had a great weekend. Spent most of my weekend with just myself and my dogs. My wife had traveled back to Florida for a wedding in the family, and I hate flying, so I stayed here and dog sat and cleaned the house because my wife brought her mom back with her for a week, so yay. Anyways, so as far as weather here, I know everyone's very interested in the weather report here in Larkspur, Colorado. It's sunny. It's probably about 70 degrees, and as soon as I'm done with this, I'm going to go spend some time outside with the doggies and play some fetch. And anyway, so all right, well, let's go ahead and dive into the weekly update. Let's see, first things first, the week on Wall Street. Last week was a pretty volatile week. I know things had kind of bottomed out midweek, but the Dow Jones slipped 0.51%, while the S&P 500 dropped 0.43%. The NASDAQ was up 0.31, and international, let's see, they gained 0.67. So kind of a mixed market. Domestic U.S. seemed to have done, not quite as well. Was down slightly for the week. Tongue-tied today. NASDAQ, which is heavily technology, seemed to, squeak out the week with a positive return, as well as the international markets. So, all right, the next headline here is lots of motion but little movement. If you watched the weekly wrap-up last Friday, you could see how the market kind of dipped down and then rebounded on Thursday and Friday. So, I mean, part of that is, good jobs numbers are continuing to come out, which is providing some steam, for the markets. See, third here, the Fed hints at a turn. I know I've been harping about inflation probably, going back to last summer with all the stimulus bills and money creation through the Federal Reserve. We're getting some hints out of the Fed. They released their minutes last week for April, and it looks like they're probably going to start slowing things down, but there really isn't a timetable on that. So we'll see where that goes. All right, economic data coming up this week. We have new home sales and consumer confidence tomorrow. Thursday, we'll have jobless claims, durable goods orders, and GDP. So that should be interesting to see where those GDP numbers come in. We have companies reporting earnings, AutoZone and Intuit tomorrow. Wednesday will be NVIDIA. It's a hard word to say. Okta, Workday, Dollar General, Snowflake. And then on Thursday, we have Salesforce, Costco, Best Buy, and Dell. So again, just to kind of recap last week's numbers, the Dow Jones down about 0.5%, same with the S&P, NASDAQ up 0.31, and the international index up 0.67. So for the year, it looks like NASDAQ has actually performed the worst. And the Dow Jones has actually performed the best. So, we'll see how these kind of level off. And, I am expecting some slowdowns in the economy later this year. The supply chain disruptions that we've had over the last 12 months, that's going to catch up with us sooner or later. So, all right, let's go over to the first white paper I'm sending out this week to clients. The first one is inflation can be a scary word. Especially, if you're older and you're living on a fixed income. If prices go up 30, 40, 100%, what's that going to do to your buying power? And, how's that going to affect, your lifestyle and being able to afford, what has been planned on for, maybe 20 or 30 years. So, that's probably where I'm the most nervous right now, is just how is inflation going to affect us over the next decade. I put a lot of plans in with people over the last 15 years that I've been doing this, and if it gets completely screwed up, that's not going to be an ideal situation. The next one is the Fed's taper rehearsal. I know they've been floating a lot of news that they may consider, slowing down on Fed purchases and increasing interest rates. Again, it's kind of a wait and see. I know the Fed has, their guidance has basically been they're not going to do anything until inflation reaches a certain number. Just looking around, going to the grocery store, going to Lowe's and buying goods for the house, things are getting more expensive. So I know that the CPI, the Consumer Price Index, doesn't include a lot of things that are day-to-day expenses, gas, food, things like that. So, we're seeing it here just in the, regular lifestyle living. So I'm sure most people out there are already experiencing some level of inflation regardless of where you live. So, all right. I have an article here I wanted to share with everyone. I saw this last week sometime. So it was dated May 21st. So it was probably Friday. And the article is from Business Insider, and it's in the personal finance section. The title is, I always thought saving in a 401k or IRA was enough for retirement, but financial planners showed me 4 other smart ways to save. So I know I'm always harping on my clients to try and save a little more, become more efficient in their cash flow. So the 4 highlights I'll cover here. The first thing, consider an HSA or a health savings account. It's a good way to put money aside for just the unexpected. We don't plan on getting sick or hurt, but those things do occur. So setting aside some money today for those rainy days is often a good idea. Number 2, work on becoming debt-free. That's probably one of the biggest roadblocks for people. If for some reason you become sick or hurt and you can't work, those debts do pile up, and you don't want to be at risk of losing your home or your car. So the faster you can pay off your credit cards and your other obligations, the better. I know that's something that my wife and I are working on ourselves. Paying down our mortgage as fast as possible. We bought a fifth wheel trailer in January because the prices were so damn good, and we're going to pay that off as fast as possible. So, it is nice to be at a point in my life where I'm not having to worry about where money's coming from and such. But, the future is always unknown. So, what's going to happen with the dollar, what's going to happen in the investment markets. But having a good nest egg set aside, as well as, not having a lot of outstanding obligations is really a good idea. Number 3, watch out for fees. If you're investing just primarily through your 401k at work, odds are, your investment choices are limited to whatever mutual funds that 401k provider offers, whether or not it's Fidelity or Vanguard or Charles Schwab. You're probably going to get a lineup of 10 to 15 mutual funds to build an allocation out of. The one downside to mutual funds that I personally have tried to avoid is just the management fees can get a little pricey. I understand with certain funds such as international and things where there's a lot more due diligence, it does typically cost a little more. I'm a big fan of ETFs. Anyone who's been investing with me for a while knows that I use ETFs primarily in the models that I use for accounts that I personally manage. Can't do a lot about 401ks. We have to kind of live with what they're built from. But paying attention to fees, a 1 or 2% additional fee that you might pay on a fund, may not seem like a lot right now, but when you extrapolate that out over a 20 or 30 year period, it does make a significant difference. And then the last thing to consider would be a life insurance strategy. Not necessarily not your term life that you would get through your employer or a personal policy you might get from your car insurance agent. You're looking at what would be a permanent life policy or a whole life. Those that you're paying a little more into, but what you pay in above the cost of insurance will pool there and can be invested in things as conservative as bond-like investments, all the way to something as risky as stocks, that you would have just in your regular investment account. So, The advantage of doing that, let's just, for simple math, say that the cost of insurance on a $1 million policy was $100 a month, and say you're putting in $500 a month. The additional $400 pulls up, like your 401k, and over time does provide some tax benefits because you can take loans from those policies, and you don't have to pay any taxes on it as long as the policy doesn't lapse or it doesn't get over over contributed to, which would you would lose the tax benefits. It's just another strategy for adding on top of your 401ks and your IRAs to kind of kill two birds with one stone. Most people need life insurance if they have family or kids, and also provides an investment strategy for 20, 30, 40 years down the road. So, all right. So I'll attach a link to this article. So if you want to go through and read it, you're more than welcome. And then the second article, this was actually, I meant to share this on Friday and forgot to mention it during my wrap up. But this is talking about the real estate boom. In Vegas is just getting crazy. I know I can personally speak to this. Anyone who's known me for a while knows that I lived in Vegas for a little over a year back in, gosh, what was that, 2005? And we had actually almost moved there back in, I think it was 2001 or 2. My wife had, her company had moved their operations to Las Vegas, and we were shopping for homes there. You could get a home 20 years ago for in the suburbs of Vegas or Henderson, and for $200,000 to $300,000, you could get a 3,000 square foot house. The lots are kind of small there, but you could get yourself a brand new beautiful home for $200,000 to $300,000, which with the taxes in what county is that? Clark County, Nevada. Your mortgage was very, very reasonable compared to other places like Texas, which has high property taxes. So, long story short, we didn't wind up moving there. My wife was offered a job in Texas, and we wound up moving to San Antonio for a couple years. Well, due to some mergers, we wound up going to Vegas anyways, and just 2 to 3 years later, all the home prices had gone from, say, $200,000 to $400,000, and I'm not going to get into all the details of what was causing the inflation there, but evidently they're starting to see that sort of same situation again. One of the major reasons is due to lumber prices. The increase in lumber, according to this article, has added about $35,000 to the price of a home and has raised the market value by nearly $13,000. So, anytime there's a boom where you have not enough supply and you have more people wanting to purchase, it's going to push prices up quite dramatically. So we're not just seeing inflation in food and gas and things like that. We're seeing it all the way across the board. Kind of makes me feel nice that I have a house that's built and finished. I was going to build a porta cochere over where I park my truck because we get some really awful hailstorms here in the spring and summer, but I procrastinated on it, and now I'm stuck having to wait until prices, for wood get back to a more reasonable price. So, all right, so that's basically everything I had. I'll attach a link to this article about the housing booms, and so that you can read through that at your own leisure. So that's everything I have for today. I've been rambling on for about 14 minutes, it looks like. So if anybody needs anything from me, here all week, just be sitting here at my desk or playing with my dogs. So if you need anything, reach out to me via email or call, or pick up the phone and give me a call. If there's anything you'd like me to talk about or discuss that you feel might be of importance to everyone else, send me an article or a topic suggestion. Also, be sure to like, subscribe, and share with friends and family. I would certainly appreciate it. And hope everyone has a fantastic week. Talk to you on Friday. Bye-bye.